When you fail by yourself, that shows up as a failure. But if you fail with everyone else, that shows up as an outside event happening to you. So back in 2008, when the stock market fell 58%, that was not a failure for conventional advisors because everybody lost. And so they did not fail. That was just an external event happening to them. But if you fail by yourself, let's say in 2007, the market was up, but your account was down. Because you may have been the only person down that year, that would have looked like a failure. And I find it really interesting how kind of failure or the idea of fault changes when the amount of people having that failure happens to them. Now, the reason I'm bringing this up is because of the theme that I want to share with you this week. And the theme I want to share with you this week is something that I'm calling Finding the Bottom, Gold and Silver. Hey everybody, this is RC Peck, the founder of Fearless Wealth, and this is my weekend podcast. And if you've had anything to do with gold this year or last year, it has shown up as a failure. Why did you own it? You could have just bought the S&P 500 and look like a winner. And it's really difficult to fail on your own because then it does look like a failure, or to lose on your own. Where in fact, if you lose, you can interchange the word lose or fail. If you lose with everyone else, it's not a loss, it's an external event happening to you. So gold broke down this week. And the question is, where is the bottom? Where is the bottom of gold? Where is the bottom of silver? But mostly, where is the bottom of gold? And I have two charts that I want to share with you to kind of help us understand where that bottom might be. Now, the first chart I have for you is a price chart of GLD, which is an exchange traded fund. But it tracks close enough to gold, and it gets updated much faster than the price of gold, at least with the price charts I use. So we're going to use this price chart, GLD. And if you look here, we've had kind of, you can either call it a double bottom or a triple bottom. We had a bottom at the end of June, and then you can either call this two more bottoms, so second bottom and third bottom, or you can call this grouping a second bottom. So we've either had a double bottom already or a triple bottom, and with the price of gold breaking down with this consolidation, it was very much looking which direction to go. With it breaking down, the next major point that it really wants to stop is this red line. Now, for the actual price of gold, that red line is $1,188. $1,188. So the question then becomes, which I think the probability of it hitting 1188 seems very high, considering there's not a lot of support between where it is now and this next bottom. So there's a high probability it's going to hit this 1188. The question then becomes, does 1188 hold? Is that the kind of the front line battle of how low gold can go? If it holds there, that's significant. If it breaks down, and you've heard me say this number before, the next major support below that is about 1050. And $999 is not that far below 1050. So it's very likely if it does break, we could see a 1050 or a 999. Now, again, I'm not saying it's going to. We have to watch the price charts to indicate which direction it's going to go and how it acts. Back here in June, it touched 1188 and took off to the upside. And back here in December, it touched it, kind of hung out, touched it again, and then broke above. So we'll have to see how it acts and reacts to that 1188. But until we get down to there, and I'm kind of saying we probably will, and I know that's kind of a prediction, but it looks like a pretty high probable chance of us getting there. We're going to have to just wait and see how it acts and reacts. Then the next price chart, and the last one I have for you, is silver. Now, silver, as you can see, looks much different. It actually looks much worse. It really did not get a bounce in 2014. In fact, it spent a lot of time below or in the negative territory this year, and it didn't really have a collapse. If you can see over here, it did consolidate like gold did, and it moved slightly lower. But we kind of have this support line at about $18, which is where it is. So we're kind of watching this too. Now, silver is a secondary mover to gold. We're really watching what gold does. If someone came to me and said, "Give me something to buy, and I don't want to look at it for the next 5 years. Just give me something. I'm going to sail around the world. What should I put my money in?" My answer very clearly would be, go put all of your money in silver, and you don't need to worry about it for the next 5 years. Or go put your money in gold, and you don't have to worry about it for the next 5 years. But the benefit of that person is they're not going to be checking it at all, and we are. So the question, where is the bottom? And what I'm going to look at most, and this is the takeaway of the week and the point of the week, what I'm going to look at most is how the price reacts to news. So last week, news came out that something called the silver fix in London is going away. And this is where a handful of banks get together each day and say, we think silver should be this price. They're literally fixing the price of silver. So the silver fix is going away in the next 2 months. Now, you'd think that would be positive for the price of silver. It moved up a little bit, but not much. So right now, and this is also true for gold, good news is still bad news for these two metals. And bad news is still bad news for these two metals. Even when Syria went into a civil war and Thailand had a military coup and Ukraine almost went into a civil war or some sort of war with Russia, one would think all that would be good news for the price of gold and silver, but in fact it wasn't. So right now, good news is bad news and bad news is bad news for gold and silver. And really, this is just really another way, to be fearless, to be knowledgeable on your way to having that secure and that free future. So until next time, I'm R.C. Peck.